We're going to do some due diligence, going to take a look at the week ahead. As far as the recap goes, it's going to be relatively simple, but some due diligence. I also thought I'd actually flesh out my trading methodology, give you guys a bit of an insight into what my entries look like, what my exits look like. It seems to be a question that pops up quite a bit, so we'll throw that out here as well. But yeah, let's get going here. I'm doing great. Looking forward to another week of fun. Recap. No trades. Last week's calls, none. Specs, none. Weekly trades, none. Review rules. This section's going to move pretty quick today. This I'm not doing, so no FOMO. Yeah, that's not a problem. I took out stop rules. Trading journal daily, don't need to. I'm taking trades at the moment. When I start to, I will. Coins have been doing great, stocks not so much. Yeah, I think that's true for a lot of people, and I'm going to go over that a little bit today too. There's a lot of that during the week where people were really irritated with their equity performance. All right, sizing targets, yeah, that's fine. Don't marry positions, yeah, that's fine. No trade fundamentals, no technical, yeah, that's true. Reality, stick to your 2-month goals. Can't go broke. Yeah, I mean, all of this is true. I wouldn't say that there's anything here that I'm breaking. I wouldn't add anything to my rules either, so that's that. Key events in the week ahead. If you guys are unfamiliar with this tool, I recommend you check this out. Um, just trying to think. Maybe I do want to add to my trading rules. But that'll flesh out a little bit more when we get into the trading methodology side of things. That'll be there. So, okay, journal. Nope, I'm here. Yesterday was a technical error with the Windows update that crashed my everything. And once my live event that I've set up, the time has passed for the start time. I can't actually enter that live event, so I'd have to redo all that work. So I just took the day due to computer error. Spent it doing my own things and stuff. Hopefully, everybody's doing well. But yeah, this is important. I have to keep doing this, even though I may not be taking daily trades. I find that this weekly is something that I definitely have to keep doing. So, key events this week are definitely the infrastructure spending from Biden. The Medica sales date is March 31st. EV sector with Bloomberg. Virtual Investor Days, Work Summits, Chewy earnings report. This could be good catalyst for Zomedica. Um, Lots of IPOs on Wednesday. Wednesday seems to be IPO day. See, the markets are open on Good Friday. Okay, so it is going to be a short week. Markets are closed Friday. Tuesday's Chewy earnings. I would be okay with that. I would be okay with that. And that's one of the things that I'm going to go over later today is my methodology and how I exit and enter from this point out. Um, the book of the day, by the way, guys, I'm not going to add it to my reading list. The book was Mastering Trading Psychology. After purchasing the book and listening to it, what sounded like a phenomenal read was actually dog shit. It was a book written by a trading community that's been put on Amazon, the Bear Bull Market community. It's largely day trading off of TA. The majority of the book I don't find is useful. There are some great best practices that are in that, but they're best practices that I put out there pretty regularly on the stream. Trade your own trading. Don't worry about what the smart money says. Set your own goals, set your own targets. Don't worry about what anybody else is doing. Worry about yourself. Trade what you know. Just really simple stuff. So there's not a lot of value in the book. Yeah, I'm still in SNDL. Yeah. So here's the portfolio, guys. So portfolio is down 30% right now. So I'm at 75 grand on the year at the moment. But we'll get into why I'm not actually sweating that whatsoever. That still has me up 50% on the year, so I'm not really too concerned about this. But even down that 30% isn't craziness for me. And I'll go into why that is in a little bit here. I just want to check this catalyst, see if there's anything else that really has me revved up and ready to go here. Yeah. April 1st, April Fool's Day, OPEC meeting on Thursday. ACAD may be a play. Mike Tyson branded beverages. Interesting. Might be a play in that. That's an extremely tiny little stock, though. Okay, so I'm not seeing a ton this week. Zomedica is going to be obviously the big focus for me. Um, think what I'm going to do is we'll go in here and I'm going to create, let's do a new notebook. Because I've committed to going back to taking fewer positions, and I'm not going to take 8 trades a day, 5 trades a day, 4 trades a day, whatever it is. And I am going to try to take these longer term positions from this point. I am going to put these in, and I'll add notes for each of the positions that I'm currently in. FTOC, and then synthetic. All right, entry. Bullet point thought process on entry was innovative product in a hot sector, specific start date, start date, expanded pipeline, much hype. Conditions for exit for me will be sales numbers, pipeline updates, price movement, price target, $10. All right, there's a Medica. It's literally that simple. That's my thought process on this play, guys. I know that for a lot of people, this may be oversimplified, but this is literally the points that I go through in my head on why I entered the position, and then also why I'm looking to exit the position. So, hot sector. So this is a fintech play as well as a SPAC play. Payoneer partnership with MasterCard. Digital payment system. Potential crypto play in the future. Exit. Ticker change. Price target. SNDL. Entry. This one's going to be hot sector. Pot. No debt. 700 in cash in hand. U.S. legalization. Diversification in supply, producer, investor. Exit. Position, merger, price target hit, $10. SHG. Emerging sector. Healthcare. Widen care. Business expansion model. Executive team. Exit criteria. Moose Catalyst, PT target, $10. All right, so that's a breakdown on those. As far as trading methodology, guys, I want to create a breakdown of which step to follow. So this is going to be a 1, 2, 3, 4 for me. Let's see, let's go entry first. So, what's up? What's up? What's up? Good afternoon, all. Weekend is going well, except the book that I read for the week was completely useless. Other than reading it to know that it was completely useless. So. I will not be adding that to the list. The reading list will remain the same for this week. That book does not get added. That is the first time this year that I have not added my weekly book to the list. The book is called Market Trading Psychology. It was written by a retail trading community, and the book fell very far short of my expectations. So, entry process. What my entry process is going to look like is identify hot sectors, identify leaders, it's not really going to be leaders because I can't afford it. It's going to be emerging players in that industry. Identify catalysts, set a price target, set a sizing, enter position, exit process. Identified catalyst or date hit, price movement, exit. The exit process is super simple for me, guys. It's not going to get much smoother than that. I'm going to grab some water here, and 2 seconds. I'll be right back. All right. Okay, so that's it as far as that goes. Let's go. Let's actually take a look at creating these. Um, so let's find one play why retail investors hate him. Yeah. Oh well. Ebb and flow, right? Ebb and flow. Up 150, down 30, still green on the year. Who knows what'll happen next? All kinds of fun things going on. Yeah, all kinds. We are doing well. I did not watch Justice League yet. No, I did not. I have not got around to it yet. I really do want to get to it, but instead of family movie night last night, I my wife and I went out and had some fun with everybody. Um, But yeah, guys, for those of you just joining, we have already gone through a bunch of stuff. So, weekly DD and recap. There were no trades last week. Calls. I didn't make any calls on the week. SPACs, none other than FTOC that I'm in, but that's not a new SPAC emerging. Weekly trades. I didn't take any. We reviewed the rules. There's nothing that I. Oh, actually, there is something that I added to the rules. Was a new practice of creating an entry exit log for each position, complete with DD. So I know I do that a little bit on the day. So if you look at daily calendars, typically I put in my psychology, and then when I am taking a trade, let's go back to where I was taking trades. Typically, I just put in real quick entries and exits. Sometimes I'll put in what my thought process on it, but I don't think that that's really enough. The 4:3 ratio was a horrible mistake. Yeah. No, it's not saying no more SPACs. It's saying that I don't see any SPACs of value this week. That's largely from my process currently being to hold the positions on I'm in. But I am going to start create these ticker entry exits for each position that I do take. Instead of me taking positions rapidly, so 2 or 3 positions a day over the period of the week, it will most likely be single positions held through 6 to 8 weeks. That's where I found my success last year. I'm going to return to that. It's not that I had bad success so far this year, but the majority of my sizable gains came from this strategy. So I'm going to go back to that. Actually, I've been in that. I haven't really January was a bit of an exception, but since February I haven't really been actively trading on the day. I've been locked into these positions for good reason. So what I'm doing now, guys, is I am going to put in entry and exit. So reasons why I entered into the position, reasons why I would exit the position are there. I know there's a lot of people that like to have clearly defined stop losses. What if this thing moves against you? Typically, that's not going to affect my positions. So here are the ones that I've already created. But I want to show you guys as well the trading methodology, how I go through a thought process to look for an entry on a stock, and then what my exit process on that stock looks like as well. So we'll do one. Just to give you guys a feel for what it is that I do. So we know coming into the next quarter. So we are taking a look at April, May, June, right? April 2020, these were the big events that you had to know about that were happening around the world. Yeah, Q2. Okay. So coronavirus updates, we can probably expect to see those again this year. Ceasefire wars. So that's something that we may potentially want to look at is different global crises. Okay, so that's April, May. Gun restrictions in Canada, Afghanistan, offensive operations, Iran naval incidents, protests in Chile, Pakistan, attack in Burkina. June. Okay, so protests start back up. That's one to keep in mind for sure. Let's take a look at that one. I think that's going to be the play. BLM court cases right now in the news. Kyle Rittenhouse trials delayed. So this won't actually be heard until November 1st. So this one's out. Kyle Rittenhouse isn't going to happen. Okay, this has to do with the court selection process. Mhm. Okay, this is the press getting involved. Good morning, good morning, good morning, everybody. Um, yeah, we're definitely heading into seasonality again on this. Protest season really kicks up come the summer once students are off, paired with. Okay, so what this is going to look like is, guys, I'm going to come in here, and when I want to take a new play, I'm going to go in here. And so typically what I would do for that thought process, my methodology on entry, is identify a hot sector. So we just did that, right? In this case, it's riot season. Emerging players. Stocks that go up on riots. Okay, so DGLY, ISNS, Ruger. So these are gun stocks. That makes sense. Taser. Yeah, obviously Taser. Smith and Wesson. So it looks like guns, and I bet you Palantir would be in here. I bet you. Okay, so yeah, DGLY is $1.67 still. I'm gonna look at DGLY and I'm gonna look at ISNS and see between the two of them which one I like more. So here it's gonna be DGLY or ISNS. Identify catalysts. So for ISNS, let's open up Seeking Alpha first and see what kind of news has been popping up on them. Okay, Q4 results. Revenue of 2.8 million, relatively small company. Revenue projections are down. NFL season starts September. I know the CDC has said that they're going to push trading back, or they're going to push sailing back. Florida state governor is looking to sue. So it looks like there's going to be a hard push for cruise lines to recover on this. So those are the big plays for DGLY. Cruise lines, protests, NFL. NFL's not till September, but it would be BLM, protests, cruises, NFL. Let's open up DGLY here and no news really since January. They've been relatively quiet. That was their Q3. When is their next earnings? Oh, their earnings is estimated this week. Interesting. Wait, what? Oh, GameStop. DGLY. Yeah, March 31st, 8 a.m. Hmm. Yo, what's up? Price sentiment looks good. Okay, so this thing is at $1.67 right now. Let's pull up the chart in DGLY and see. Let's go. I want to go. Let's go 5 years and see if we can identify. So this is. Let's pull this down. So this is from April into July 2016. There's an increase there from the $4 range to like the $5-6 range. Following year, April into June, July. Yeah, there's another one. Big drop, and then a bam right there in start of July. This thing just seems so go. Start of July goes. April into there's the start of July. Did not go as much in 2018, but there was still definitely something there. 2019 April into July. This is the COVID drop though, so this is an outlier. April. Man, this thing is all over the place. I think setting a price target for $5 on this is not going to be outrageous. I mean, looking at this is through the protests, right? This is through the BLM and the protests and whatever. And this thing went as high as $7. Like this thing took a run for it. I think I could set a price target on this of $5, and that would be reasonable. Which would be so if I set a price target of $5. Sizing, I'd want it to be. I mean, I can't really exit a position, but yeah, I mean DJLY I think is a really strong position. Um, so the sizing for me largely depends on how Zomedica performs. Um, if Zomedica in the week ahead, yeah, $1.65, so 300% increase on that trade. I think I'd want to put 20K in here. Maybe more. Maybe 30K. So yeah, entry exit guys, I'm gonna go in here. I'm gonna go, okay, well, DGLY is the position I want to take. My entry criteria are we are going into protest season. So seasonality, it's not a hot sector, it's seasonality. COVID, tents are a catalyst, protests, riots, court cases, cruising, NFL. Just trying to think of anything else that I like on DGLY. The price is down. Like the exit catalysts into September. No, I didn't see it, and I'm trying Snow to actually move away from a lot of those day movers. I am going to get back to the strategy that worked really well for me last year, which was not to take day movers, but to play things on a 3 to 8 week kind of scale. So, really trading out into the next quarter is going to be the name of the game for me. And as I exit a position, whatever gains I take on that, I'll be able to take a look at that and go, okay, well, great, these gains are out. Now I have the ability to look at one position or potentially two positions. So I know with Zemetica, for example, I'm expecting it to go to 10. I've got a 237 average. So if I quadruple up, I should technically make like 150 grand off of that, which enables me to take a whole bunch more positions into the following quarter. But I can't cross that bridge until we get there. But FTOC, I'm in at 13. I'm expecting it to go to 20, $30. So, like a 50% to 100% gain on that. That'll enable me to take a couple more plays. SNDL is going to be a little while out, but yeah. With my funds tied up into these positions, I don't have the ability to do day snipes like that. And typically I wouldn't. Would you buy DGLY calls or just shares? I typically like to trade in equity. That's where the majority of my growth is coming. When a stock is $1.67, I really don't see a reason why you would necessarily take a call unless that's all the money that you have is in an options portfolio. I do have a really long term options on DGLY into 2023. But for me, these positions that we're talking about, these are equity positions. Just a disclaimer, guys, everything that we're doing here is educational only. This is not financial advice. Nobody should be doing what I'm doing. You should make your own decisions, your own trading methodology. You should understand what it is that you are doing and why you are doing it. If you don't know how or why you're doing that, you definitely need to seek out a financial advisor and not be looking to Twitch, Twitter, Facebook, YouTube, wherever for somebody to provide you with an answer as to how or what you should trade. Okay. Yeah, you definitely want to take a look at getting some kind of financial education. A lot of you guys are like, yeah, but millennial, you didn't know anything about the market. You just got started in it. That may be true. However, I also dedicated 4 days a week to learning the market and how I specifically was going to react to that. So, what's happening in September? What catalyst? Um, well, that should say catalysts into September. So the cruise season looks like it may actually have recovery, which is good for them because they've got an agreement with CCL or RCL, one of them. Protests, it is protest season. We've got court cases or potential riots. If gun control comes in, there could potentially be riot on that for sure. Just because Trump's not in office doesn't mean that contingent is gone. NFL is starting up in September as well. So also LPL. I'm glad that played out for you, man. I'm glad that played out for you. Um, but yeah, where is LPL right now? Yeah. Yep. Am I in UMC? It's been cruising. I am not in UMC on equity. I do have a. Um, so here's the options portfolio, guys. Right now, what we're looking at is I have into 2023, I've got SNDL and DGLY calls at 250. I've got for January 2022, I've got SNDL calls, Coke calls, Genus puts, GameStop puts, CCL calls. I've got UMC calls into October. This is the furthest out that I can get a UMC call. For September, I've got AQB and ACRX. AQB, this is the furthest out I could get it. If I could have got it further, I would have liked to. And then May, I've got these Macy's puts. I probably won't see anything from these Macy's puts. And then I've got another April put for next week. This is a Friday weekly on GME declining. We'll see if it happens or not. It was a $50 bet that I was willing to put down, that we see GME fall pretty hard. My thought process on the chart with GME was, and I understand everybody has an opinion, so understand that this is just mine, okay? If you have a different opinion about what's going on with GME, so be it. But the way that I see this, guys, is over the last let's go the last 10 days. The way that I have seen this go is I am seeing, we're up around this 200 price level. We're seeing a steady decline as people sell off, take profits. They can't hold it forever. And then we saw this relatively hard fall here. This isn't 10 days, though. This is 5 days. So where's the 10 days? Oh, this is 10 days. No? Weird. This doesn't have anything on this chart for the... Okay, well, here's the last 3 months, guys. So this is the initial insanity. And then we had the market lockdown, and this thing came back down. And then it came back up. Kind of came back down, and then it went back up. And the narrative here, guys, is we are in the midst of a short squeeze still on this, okay? In my opinion, we are not in a short squeeze on this. I don't think that there is still short squeeze potential on it. I think that this drop here, this is where people started to recover. So, yeah, so the reason why I use interactive brokers for one thing and then TD for another. I'm not using TD Ameritrade. I'm using TD Advanced Dashboard. This is the Canadian dashboard. The reason why I use this for U.S. equity trading, because this is tied to my actual bank here in Canada. And so there's a whole bunch of perks in doing that. But I use TD for equity because of the perks that come with using this over IBKR. Also, I prefer the charting and the tools and analysis on this. This is where I spend the bulk of my time is in equity, so I want that to be a platform that I know how to navigate and I really like. With IBKR, it is literally my options portfolio. That's why it's there. It's completely separate from everything else and is specifically options trading. That's all I do in there. There's nothing else in there. There's no equity position in there. It is all options. And then I have a third app that I use that is another completely separate account for Ethereum. That way, when I open one platform, I know what it is that I'm looking at. I'm never going to confuse, okay, well, is this my option? Is this my equity? Is this whatever? I want to make sure that I've got it nicely divided in my mind. So really, convenience and familiarity would probably be the best answer that I could give you. My thought process on this, guys, is as we see this buying up here, I think we had a lot of shorts cover, and I think we saw a lot of hedge funds buying back in because they saw the sentiment. We see a lot of people buying back up because the sentiment around it. And then somewhere around here, the narrative became, we're going to $1,000 on this because the short squeeze is still imminent. I don't think the short squeeze is still imminent. Most of the short ratios that I can find on this have this somewhere in the 20 to, well, I mean, we'll say 15 to 30 range. Depending on the day and time when you look at that. But the short interest just isn't really there like it was before. The volume has also started to decline quite a bit. We saw a little bit of a pickup here, but ultimately, guys, what we're seeing is, okay, well, there's a sell-off. And then we've got, it kind of stabilizes for a little bit around 200. So we broke through 300 on this to 350, came back down and lived around 300 like it was going to break to 300 for a little bit, and it didn't. And then it declined to another level, came back down to 200. And then we saw this drop here on a day. This was on the earnings. It turns out fundamentals do have an effect on this, at which point we saw it buy up. In my mind, what I'm seeing here, guys, is the day before earnings, I think that there was short I think that people did take shorts. I think that retailers and hedge funds alike both took shorts into earnings because they expected poor results. What you see here on these following days subsequently are people buying back to cover the shorts, right? So when you do the short, you borrow the share and then you got to buy it back at a lower price to take profit, right? I think that's what happened here, where you see retailers and hedge funds take a short at this position. It comes down here. You get the uptick rule. People buy to cover their shorts. It goes back up in value, and now we're starting the week back off exactly where we're at 200 at this level. I do expect that as we open on Monday that this is going to decline back down. I think that this time, though, we see it come back down to this level that we had in the past here, this 120 sub 120 level. Now, why did I take a $70 put if I think it's coming down to the 120 level? It's just because I wasn't going to put more than $50 onto a put, and I think that the potential is there for this to fall $100 per share into the week. As far as short interest on this, GME short interest is going to bring up a bunch of different results. So let's take a look at all of them. Here's Fintel. Short volume is 27% on this one. And you better with that cheer. Brother, anything that you guys send this way is always appreciated. It doesn't have to be more than that. That you guys are just here hanging out is often enough. So don't ever apologize for whatever you're doing. Okay. Short interest on this one is showing at short interest looks like it's 1.8 billion from the 12 that it was back in January. Short float here is 18%. So we have a 27, we have an 18. I don't see a number here on this one. I know FinViz gives us some other insight into this. Welcome, Gianzor. All right, let's find GameStop on this one. So this is sorted by short float. She's doing well. So here's the short float. GME is not here. 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 There it is. GME is 154th most shorted stock. It's an 18% short float, guys. As far as this being a short squeeze, I very much doubt it. I've been doing pretty well. I'm still up 50% on the year, which isn't terrible. It's definitely down from the 150 or 125% that I was up, but the positions that I've been, I'm very, very confident about. So, well, short float for me is understanding the ability for them to actually pull off the short squeeze. The higher that is, when they were actually seeing results on the short squeeze on this number was 120%, which is what had it crazy high. Whereas now you look at the number one in the market at 65, right? So for me, guys, when this number is down, so we're seeing kind of 18 to 25% right now, the likelihood of a short squeeze happening on this isn't there. And when I think over time, if we go into something like StockTwits, if I go in here, we're going to see a couple of narratives before we go in here. So I'm going to leave it at Zom. Before we go to Jimmy, here's what we're going to see. This is going to go to 1,000. We don't care what the price movement does. We like the stock. We're going to buy, keep buying. There's a problem logically with a lot of the arguments that I'm seeing in here. Okay, so here we are. The narrative that this is over 500% owned, the numbers don't add up. Get in while it's low. Yeah, I mean, that's a bear sentiment. Think about how long this has been going on. People are really in this to win no matter what. We have time on our side. I think that that's an argument that is really falling apart. Especially, I saved one of these. I wanted to show you guys this. What's up, I bought 11 months in a row. Let's go. I wanted to show you guys this. There's somebody that tagged me. There's something here. Here. Okay, so here's somebody who apparently is an ape, right? Man, listen, I just booked a vacation off the money I made. Here's the thought process with how the short squeeze is supposed to work. You're supposed to buy the stock, right? And hold the stock. Don't sell the stock, because if you sell the stock, you are allowing people to cover, right? You're allowing the shorts to cover by buying your position. So they're not supposed to sell. What I see regularly throughout GME's page is people making the claim, look at all the gains I've made playing the stock, which in my mind says that the retail sector is not aping. They're not holding. They're not holding. They are taking profits, which means that there are stocks changing hands. I don't think that any hedge fund is out there right now with an over leveraged short position onto this. I do think that there are hedge funds that currently are shorting the hell out of this thing, but only because they see the potential for the downward movement on it. I don't think holding tight to this is going to result in a short squeeze, given that the short float is so small. There's just not enough there. Um, So this guy's got an excellent point. Like, this is it. A couple weeks ago, this closed at 264. A week ago, it was 200. This week, it was 181. There's just going to be a natural decline, and there will come a tipping point, guys. And I think that somewhere around that 120 level is going to be that tipping point. That if we dip below 120, that the sentiment of a lot of these retail traders is, okay, this is done. It's hard enough for these people that have been chasing fads for the last year to hold as long as they have already. But that narrative of just keep holding forever, there are lots of plays that are currently happening in the market that they want to get their money out and play. They want to be playing the genuses, right? Zemetica might be one of the plays that's coming up that they want to do. CTRM might be something that they want to do. So it really is like, can't trust stock tweets. There's so many bots. It's worse than Reddit. So I use this, guys. People are like, oh, stock tweets, what are you going to do with it one way or the other? For me, what I use it for, guys, is understanding the psychology and the sentiment of the people that are holding it, right? There's lots of plays that these guys want to get into. They don't want to stay in this when they see, oh, I'm not making money. I'm just slowly bleeding this out. So I did buy Ethereum, the coin proper itself. I'm going to, with every win that I take, I'm going to take $1,000 and put it in Ethereum. And that's just going to be a rule from now on. When I exit a position on a win, $1,000 of that win is going to go into Ethereum. And I'm just going to have that as a long-term hold for myself. So yeah, guys, with this, what I'm seeing is the patience is not paying off, right? If you were one of the people that bought GME at 200, 300, 400, God forbid 400, but 400, right? On the narrative that this is going to go to 1,000, GME to 1,000. You don't think the government bans crypto when they make their own? Ethereum has been one that they've talked about using for SWIFT transfers, which are global banking transfers. So I'm a little less worried about Ethereum versus say Bitcoin. But how effed am I was I'm not. And this is kind of the thing that I was explaining to people is with Zemetica, guys. The play for me with Zemetica was on Catalyst. I know the stock. I know what I'm trading. I know that they've got a sales catalyst of sales cycle starting on March 31st with 3 of the 5 assays. So it's actually going to move to 5 out of 5. They're going to have more testing results. Everybody that purchases these units is then in turn going to be purchasing the testing that you plug into it. So for me, guys, I'm not sweating Zemetica. I'm not, because the catalysts that I have on my DD haven't come through. on my year. Now, again, guys, I'm playing Zemetica on essentially for free, right? So I started the year with 50K, was up at 125,000. I'm playing on gains with Zemetica. So playing with gains, I may be down right now 30% of my portfolio, but that doesn't really bother me. And that's not just Zemetica I'm down on. I'm down on FTOC, I'm down on SHG, I'm down on SNDL. But with Zemetica, I'm not concerned because the catalyst that I had outlined haven't taken place yet. The initial sales interest hasn't taken place yet. They haven't started selling their product yet. They have a pipeline for additional drugs that are going to be approved by the FDA by the end of the year. That's not done yet. Initial sales were just meant for the East Coast. So there's the rest of the US that still can play into this. The Midwest, the West Coast, California is a massive market for vet. So I'm really well. The difference with ACRX is they've had an approved product for years now and are just getting around to figuring it out. I'm not saying that there's not a play in ACRX, but it is different. But with Zemetica, guys, I'm not sweating it. And like how I want to make sure that I get the wording right. How fucked am I with Zemetica? I'm not fucked at all. But herein lies the problem with differing trading methodologies. Okay, if I was a day trader, I would be incredibly boned on Zemetica right now because as a day trader, I should have exited this long ago. I just should have. Okay. I just should have exited the position. I should have been out of it. But as somebody who doesn't trade that way, somebody who trades as a 6 to 8 week trade, this is not a big deal for me to be down. Now, if the catalyst came out that they only sold one unit, then we'd be talking something different. But that's not what we're doing here. News around pot legalizing is great. For me, I think the major catalyst for SMDL is going to be a merger acquisition catalyst or the actual news from the federal level that SAFE is a thing. So when you set your monthly balance target, did you just divide the goal number out based on, yeah, that's exactly what I did. When I needed to make 500 grand in the year, I'm starting with 50,000. I need to get to 100,000 and then 100,000 every 2 months after that with an extra month for some leeway. So for me, guys, I am not going to make trades just to try to hit this target. I'm not. This target here, I am not going to make trades just to hit this target. That's insanity. I'm going to trade the way that I've always traded, and if I break through the targets, fantastic. Yeah, so for me, like, do I need to be exiting and making money to live off this? No, I don't need this money to live off it. This is an investment portfolio. I'm looking at a target at the end of the year to make 500K on it. That's it. So am I in a rush? No, I have time. But yeah, guys, with GME, I don't see a short squeeze coming. So I did take a 70 put to see if it'll move down towards that. If I lose that, whatever, it's $50. It's not a huge concern for me. But that's the options portfolio. But yeah, so DGLY guys, the catalyst in September with the NFL, the Cruise court cases, riots, protests, and potentially COVID tents for events. What websites do I use for upcoming catalysts? Google is a big one. Essentially, what I look at is what do the years bring around. So, if I look up fire season in California, that's another one that's coming up, right? So, fire season in California started in July. So, I probably won't be looking at that now. I will probably be looking at a fire season play in May, end of May, start of June. I'll take a look at fire season plays. Yeah, May. So June through September is when they typically see fire season, uh, and I play on that. Yeah, I'm not gonna really speak to I can't really speak to the success levels of other people and their strategies, but for me, I know what's worked for me, and it's not necessarily the day trading mentality. It's definitely not TA trading. Fire season makes a whole bunch of stuff spike. That's one of the strategies that I built out last year. Where is it here? So these are some tickers from last year that performed quite well. Um, so this is one that I will probably go back to and revisit. But these all are tickers that made money on this in a big way. Big Five was a big one. But yeah, I have an ETF that I built last year for fire season that I will most likely be plugging back into in May to pick a ticker from to take into fire season. Um, I'm sure if you head to Google right now and you do preparing for fire season, I don't think entertainment centers will. Airlines definitely will because global travel is going to get locked down for even longer. But I think entertainment centers domestically are going to be just fine. Um, so one of the things that you want to do is just some brief reading on an upcoming catalyst like this and try to figure out. They're saying the fire season could be as bad as last year.
Another scorching fire season is likely.
Um, the Suez situation, the plays are already there. I'm not going to play tankers or oil. Um, Fire related stocks. GNTX. Yeah, there's a lot of plays to take into that, but it doesn't fit into kind of my framework and my timing. I don't have funds available right now, which is when they would need to be available to take advantage of the Suez situation. My plays are locked in for now, and the next plays that I'm looking at are for the upcoming quarter. So it's not really going to be something that I can play. Timber REITs. AWR, company that sells water in California. CWCO. I'm not in bonds. No, I do not hold bonds. Okay, so let's see. This is into. Right now is kind of the peak. It doesn't look like this picks up into fire season. It picks up before fire season. Let's see what else there is here. EAC UTX. Raytheon acquired them. Yeah, it's outside my price point. Find stocks that are big in California. Ooh, Smithers with that follow. What's up? What's up? What's up? Let me know how you found the stream, what it is you trade. Amgen, eBay, Chevron, Apple. Holmes HC, same with you, man. Welcome, welcome, welcome. Let me know how you found the stream, what it is you trade. Definitely don't want you guys just to be lurkers. I want you guys to be a part of what's going on here. I want to hear your thought process, what we're looking at, what we're breaking down. This dude is seriously Googling California stocks. Yep. I am indeed. What's up, Jacob? Clove, I think one of the good things for Clove would be the SEC finds no fault. You'll see a recovery there. Yuri Yanovic, thank you so much for follow, man. Much appreciated. Stocks and bonds, and I'm at the top. Sweet. I mean, we're all there at some point for sure. Stocks affected by California fire. Yeah, I prefer the ideas for millions perfectly. This stock has lost almost 20% since the California fires. If PCG, oh, this might be a short play. They are predicting a worse fire season already. Voodoo? No, this is not. This is not going to have anything to do with. The eco awareness around Bitcoin mining, I think, is irrelevant for me. Fires have put a brake on new housing. That's something to take into note. That may be another short side play that you could take. They're going to use artificial intelligence to detect wildfires. Is that Palantir that they're using? Okay, so Altera is a software company out of South Korea. There's no way to get your hands on that one. Yuri, I'm all over the place, man. I look everywhere from social sentiment indicators on StockTwits and Twitter to news sources to finance sources to Google search, like you can see I'm doing right now. There's just all kinds of stuff here that I look at. There's not really one source that I. Firefighting drones, yeah, that's something that they have in China. It's not something that's been approved here. And given the size and blaze of these fires, I don't know that that would be a solution. I'm trying to see. Okay. California fires last year. June was the worst month. Top gainers, stock market, June 2020. It's gonna be daily. So let's do. Okay, get rid of this. Go here. Let's go specific custom range. We want to go all the way back to June 1st to the 30th. There, look there. I'm just gonna open up a bunch of these and see if I can identify any fire plays that could potentially be in here off of top movers. Yeah, yeah, and I mean, 5 to 10 years from now, okay. But I'm looking for trades specifically for this year. Okay, let's start with this and see if anything pops up that really grabs my attention here. This is a fire article. Stock screener. Top OTC stocks. This doesn't seem to have the timeline on it, though, that I wanted. Okay, top gainers, Wafu. So this is education. We have to remember, guys, that last year coming out of March, April, May, that was when the market started to recover. So a lot of these could just not be relevant now. I don't play earnings as a rule. I might play up to earnings, or earnings may be a catalyst that I'm looking for specific information, but I don't really play on earnings. Traditionally, when I've played on earnings, it's been losers. I think my typical win rate is anywhere from 75 to 85%. But when I play earnings, my win rate is 20 to 30%. So I've stopped playing earnings myself personally just because. Tankers and oil seems to have been big. Industrials. Well, yeah, and they seem to be less relevant than they've ever been before. Earnings seem to be really, really relevant, especially with a lot of stocks not even taking a position, saying that they're not going to provide guidance. Look at GameStop, right? They didn't even have their CFO, the new CFO, on. They didn't have any commentary to provide. There was no Q&A. They literally read their 10Q and then pissed off. So, I mean, there's not a lot of value like there used to be. Um, Moneygram. Moneygram. Yeah, if you had funds immediately available, playing on the Suez is not a terrible idea. I don't hate it, but I'm not in a position to do that. My capital's locked up. But yeah, it's not a terrible play. This I don't hate actually. Last year, May into June, kind of doubled. Where'd this positive hype come from? This is back in February. Misses on revenue. Okay, let's go back here. I want to see, do they have transcripts? They do. Okay. I want to see what the stock was talking about. Yeah, I saw Viacom getting hit hard. Ew. Good.
I need a couple flavors for Janine.
All right.
Is that one? And she wants to know how she has a prescription. So how does she go about getting her own stuff?
She would have to ask her physician to send it to Organogram or another medicinal supplier, and they'll put her on file, and then she orders from them. And then at the end of the year, she can claim that back on her taxes.
You can't just give your prescription in online?
No.
So she has to ask her doctor to send her prescription
To Organogram.
Okay.
Yeah. And then she has to contact Organogram to say, my physician should have sent you something, and they'll have her go through a process to set up. So Tracy Olivia, thanks so much for the follow. Let me know how you found the stream, what it is you trade. So they've separated from Ripple, which is good. Mm. Guys, if you've never read an earnings transcript, I find that they're a really valuable tool, and not necessarily for all the information that's up on top, because you can read that directly yourself from the filings. But when you go down to the questions, whenever you're looking at a stock for the first time, you don't really know what you should even be asking about the stock, right? But the analysts that watch these things that have been put onto them, that this is, they might actually look at 5 to 10 stocks each, and that's kind of what they manage. So these guys here are asking the questions that are most relevant because they track the stock. They want to know what's important. So whether you agree with their bias as to whether it's a good or a bad thing, that doesn't matter. But at least getting a feel for what the questions are that they're asking can be of huge value for you. Obviously, Ripple is a big thing for them, and separating from Ripple is a good idea. How much or what percentage of transactions have gone digital will remain digital versus going back to retail? And this is a difficult question, but any perspective you can have. I'm not seeing any sign that crypto's eating into what they're doing here. Um, the opportunity is also there for them to embrace crypto. So as long as retail doesn't recover, it looks like this might be a play. I'm not going to go any deeper into MoneyGram though, because I'm not seeing it as a direct tie. I was looking for something that ties nicely to the California fires, and I'm not seeing it in that. It popped here, and it kind of stuck out from this list for me. So I don't think that that's going to be one. Cinedigm was here. Luckin Coffee, everybody remember that? AirNet Tech. What is AirNet Tech? AirNet. No, it's an advertising platform. Secor Marine. This is an Indian article. That's not going to help me. FinTech comes out in a big way. Maybe FTOC is already the play then. DuPont. What is Skyworks? SWKS. That's not my price range. Maybe FTOC is just the play. Yeah, I'm trying to look for a long play. The short is obviously PCG, right? Taking a short against PCG into the month, which might be an options play. Maybe I take a PCG put into September. The puts are actually pretty reasonable. $10 September put for 40 cents. No. Thanks for asking, though. Yeah, I mean, I think that might be the play on the week that I look to do here, just because I'm not going to be. I mean, Zemetic is going to be the bulk of my focus, but let's go to the trading journal here, weekly recap, week ahead, play for the week, PCG. Thank you all the same, Iskia. Thanks so much for that follow, man. Much appreciated. The hedge fund run by received more than $3 billion in July from its bet on insurance claims against. Ooh. Ooh. That's interesting. Opust. It's not coming up. Looking over options, what are you looking at to gauge if it's a good option or not? I don't do the Greeks. I play so when I play options, it drives people even more crazy than when I trade equity and say I don't care about things like market cap. With options, I don't evaluate the Greeks, and this is again why general disclaimer, guys. I'm not a financial professional. You should not do what I do. But what I look at is I look at it on the catalyst. Um, do I think that there are going to be fires over the summer? Yes. Do I think that that's going to negatively affect PCG stock price? Yes. In the event that it affects it negatively, what should I look at then? Well, what I'm going to do is um, I'm going to take that put into September because that gives me the whole summer, right? I might even look at October if the prices are right, but uh, I'm just looking at general price movement. What can I afford with what's in my account? Um, yeah, and that's really it. Excuse me. He's in Philadelphia. I don't know that this has anything to do with. These are financials, Snow. Is this supposed to be for the fire play? Because I don't think that this is. Yeah, there is time decay on everything, of course, but Oh, insurance companies in California. Yeah, that's not a bad idea. But again, I don't know that that's a long. Well, I guess there is a payout. Well, no, because then they've got to cover those. Yeah, I mean, that's still a coin toss for me. Maybe I just take the PCG and put, and that'll be the play that I take on it. There is time decay on stocks, but I find when you take them further out like that, the delta, the time decay is relatively low. Yuri with that sweet sub. Digging those prime subs, man. Digging those prime subs. I think fintech's going to be big. I think Biden's going to be starting to talk about Biden care a lot more. I think security, gun control, protest, riots, that's a big one. Um, but yeah, I think I take a PCG September put at the $10 range. AN, spicy. No steel plays. No, I don't have steel plays. Also, the the China talks I think are going to be really bad for the U.S. I think the China talks this time around. Biden has made it pointedly clear that he sees China as an ally. ETF, I probably won't do anything with this. I think Biden's going to be a pushover for China. Fabrics retailer. LGF. Lionsgate. I'd rather play CIDM, I think, than this. Yeah, I think U.S. Steel is not really going to do that great into China talks. I think that Biden's going to get rolled over on China negotiations for phase two trade. He's going in already saying we like you. You guys can do whatever you want, which is just about the worst bargaining position that you go into with that. I think that'll have to be the fire play that I take. Yeah, I'm just not seeing anything for me with China. I made that change at the start of the year that I'd be willing to play stocks from China, but I need to see actual reasoning for doing that. And I just didn't, I haven't seen it yet. I haven't seen any China stock that rocks my world in such a massive way that there's not a US equivalent or Canadian equivalent that I could take. Um, I was pretty close with Sino, but I think I would rather play UMC at this point. Um, than Sino. So it like yeah, there's just not a ton out there that I'd be all over. Bob is too expensive for me to play equity on. This is the UMC play, by the way. It is on the shortage. And the nice thing is UMC is not listed in a lot of these pages. So, Burn and Fire, what's up? What's up? Yeah. Yeah, China's made it very clear that they are more than happy to go after the big guys like Baidu and JD and Baba. Um, Tiger, TIGR. FinTech Holding Limited, based out of China. Yeah, financial assets in China. I'm still really, really wary about that. J8506, thanks so much for the follow, man. Let me know what it is you trade, how you found the stream. I hate crypto guys that looked at the Sigma male crypto trader, huge ego. That is not me. I did not make big gains on crypto. I am building a crypto position slowly on Ethereum, but yeah, this is like Robin Hood of China. Yeah, there. I was just, as I was saying it, this headline's there. Any your target on Ethereum? I'd say 3 to 5 grand. Reasonably, I'd say 3 to 5 grand. I don't know what the market is currently pricing in that, but I'm saying 3 to 5. They're estimating 10 grand. I think that's really ambitious. That's okay. I think I settled on my fire play being PCG puts. Yeah, 10,000 doesn't seem realistic to me, but let's find some other sources here. So just go through a few of these and get a feel for where they see it. So this one's forecasting 3,700. This one is forecasting so this guy's saying 950 to 1,100. Yeah, I saw all the news in China where government interference caused several hedge funds actually to bail out of large holdings in positions of China stocks, which then caused those to tank as a result. Go figure, police state manipulation or oversight into what's supposed to be a free trade market resulted in a lot of people being less confident in Chinese stocks and exiting as a result. I don't think Ethereum is getting replaced. Ethereum is the only one that has come up as far as international banking that doesn't have a crisis with Swift trading. Swift is international bank transfers, and Ethereum is the only one, not even Bitcoin. Ethereum is the only one that's been approved by large financial institutions for Swift trades, which is a big, big, big deal. So for me, that's kind of where I am on Ethereum. Price prediction mid year, end of year. This is saying 6 grand, almost 7 grand. is what they're forecasting for Ethereum end of year. This one's saying 3 to 5 grand, so similar to me. This one's saying $3,500, 9,000, 9,000, 100,000. No, that's not accurate. If anything for me though, guys, with Ethereum, the idea is on every winning trade, I take $1,000 or a couple $1,000 and I put it into Ethereum. I'm just going to constantly be putting it in, little by little by little. Ethereum's going to be my gold. Instead of me buying gold up like old folks used to, I'm going to buy Ethereum. 2 seconds, guys. I'll be right back. Okay, so there is one more entry exit that I do have to do here before I head out today. It's going to be AQB. This is one that I definitely want to get into. Entry. Meat shortages in China, Asia. First sales, pools, proof of concept. Revenue projection. So those would be the reasons for my entry on AQB. My reasons for an exit on AQB would be Q3 results or PT. Where is AQB right now? I don't know if there's any analysts on this. There is. $15 price target. I'd be okay with that. I think for my purposes, though, I'm going to say price target of 12. So, guys, with these, when I'm putting the entry and exit, a lot of people asking, so are you still in SNDL? When are you getting out? When are you getting out of FTOC? When are you getting out of Zomedica? This is what I'm getting out. When one of these catalysts comes to pass. So if their sales numbers come out and they don't look good, I may need to consider, okay, I was just wrong in this. That's something I need to do. And that's just on, I am playing on these catalysts. Pipeline updates, press releases, sales numbers, price movement. Those are the conditions for exit. This doesn't necessarily mean in my favor on sales numbers. It's more so sales numbers come out, and if I see the right direction on sales numbers, I may hold. If I see bad numbers on sales, I might exit. But these are the catalysts that will cause me exit, not a percentage gain or loss. FTOC, same thing. Ticker change, price target. I guess evaluation could be another one, but this one's not going to be as much. If they evaluate it to come in at $15, I may look to exit, or I may look to just wait until it's break even. But yeah. Yeah. Okay. But yeah, these are the next ones that I'm going to get into for sure. So when I exit Zomedica, I'll put probably $1,000 over to Ethereum, and then I'll split the remaining whatever comes out of Zomedica on its move in between DGLY and AQB, and those will be my two plays for the upcoming quarter that I hold. And then SNDL, obviously, I'm going to continue to hold into pot legislation. SHG is probably going to be around until later in the year. FTOC, they said first half of 2021, so we're looking into June. But in reality, I think that this is kind of the plays for me as I've got them outlined. Now, I do reserve UMC would be another one that I could possibly consider putting some money into. Entry would be semiconductor shortage. Oh no, ticker. If Kramer's bearish on AQB, that makes me even more bullish on it. There's no price target in this, but there's a bunch of buys. We got $5 here. I think these are outdated though, 6-7 months ago. Yeah. I would say if this is at 8, I'm gonna say 20. It is a big week for EV. It is. I'm not particularly in any EV plays, but yeah, it's definitely going to be a big week for it. I mean, one of the ones that could really show a great bounce back, guys, and this is not me advocating for any specific position, but if we're looking at something that's been beaten down lately, Hindenburg has been going balls deep against Lordstown. So this has been declining steadily. Hindenburg has dropped multiple attacks against it. Martini lives, ladies and gents. Martini lives. She's alive. Yeah, I would say that this is an opportunity in this sector, guys. Yes, there are alerts. AJ is also there. I don't know if Neil's getting a ban. What I know here is this has fallen from the limelight up at 30, back down to 10. I think there is opportunity for this to double to 20. to go. Thank you so much for the follow, man. Let me know what it is you trade, how you found the stream. Yeah, if I was going to look at an EV play, guys, this one has been beaten down, I think, too hard. Hindenburg, I do respect Hindenburg for what they do, but the clarification on the Hindenburg attack was that there were no actual orders placed, that it was just pre-orders. I think the response from the company that, well, we never stated there were orders, so I'm not sure what that's about. Our pre-orders were just to gauge interest. CCIV we played on a win and got out. I wouldn't go back to it. The only SPAC I have my eyes on right now is FTOC. When FTOC pays out, I will take a look at BTWN. Not until then. Ping.
Hey, can I interrupt for a second?
Mm-hmm. Yeah.
Did my background come through?
Your background didn't, but you're a little bit crackly. You have a slight robo-schlong.
I do? Really?
Yeah. Is that just my headset, or are you guys hearing that too?
Is it like just annoying or bad and I need to go fix it?
Bad, and you need to go fix it.
Okay, bye.
Yeah, but guys, Ride, I think for me would be the one. This one doesn't really do anything for me, this ping thing. Projected revenue isn't phenomenal. Yeah, I don't trade patterns, Tuco, so I can't help you with that. I don't trade patterns. This has had a huge fall from. I'd want to know what happened here at the start of March that caused this to fall like this. Credit Suisse downgrade. Yeah, for me, this isn't. You can't fix it till AJ is awake. Do you want to just type it in chat here, whatever it is that you want to say, and then you can go that way. But yeah, guys, this is probably the one that I would look to ride in the EV sector. Not at all, Tuco. I think that this is beaten down too much. There's the last that we heard, they were still on track for September to start production. So yeah, I saw that in the. This is usually, Martina, I don't know if you've seen this before, the Seeking Alpha Catalyst watch. This is one of the things that I do when I start the week where I'm looking at it. And there was a lot in here about EV stuff. So there's this. Bloomberg is actually doing a webinar 11 a.m. on Tuesday with Tesla, Neo, Fisker, Rivian, Xpeng, Ganfeng, Lithium, Rio. Like, this is a big meeting or webinar. Reviewing the entire EV sector as a whole. And then there was more. XPEV, live webcast, week-long autonomous driving test by XPEV. So it's 3 o'clock on Wednesday. Jobs report again. No, I think at this point, anytime a short firm comes out against Tesla, people just kind of shrug it off. They just kind of, whatever. At this point, I think everybody just generally accepts that shorts hate Tesla. And did you give her all of that container? Okay. And that's not to say that I disrespect Muddy Waters' work, guys. Despite many retail traders out there, I'm not opposed to short trading. I think short sellers, as funds, especially short sellers, have a crucial function in the market. I like that short sellers are there. But in the same way that if an analyst comes out, Jim Cramer comes out and says this stock is fantastic, does that mean I'm going to rush out and buy it because Jim Cramer said that? Hell no. Hell no. If Muddy Waters comes out and says this stock is dog shit, I'm never going to go near it, you shouldn't either. Does that mean I'm going to take them at their word? Hell no. But I think there has to be a moment where you pause and consider the arguments being presented at least. And that's not to say that you should change your mind off of just that, but you should definitely take a look at it and consider what's going on. What are the claims that they're making? So with Hindenburg and Ride, for example, right? We just opened up the short reports on Hindenburg, and Hindenburg's issue is, well, people are operating on the assumption that they have orders already for their trucks. Okay, so what's the response from the company on that? We don't have orders. They came right and said it. We don't have orders for our truck yet. We start production in September. The pre-orders were to gauge interest. There's interest, so we're making trucks. Okay, that's good enough for me. Kathy Woods got spooked by Tesla this week. Let's open up Muddy Waters here. But Muddy Waters has Wolfpack and Muddy Waters have nothing but respect for me for what they did with China. So GSX is one that they've been crying out against forever. So here they are tearing apart. Muddy Waters is taking issue with the fact that Musk doesn't really care about any regulatory body, the SEC, the local government, and HTSA, because they don't really do anything. And the few deaths from the automated vehicles aren't really enough. I mean, can you imagine if the news reported every time somebody died in a Ford truck? Just because it's a Tesla, people are all over it, right? But the reality is there are car accidents. They happen. Ox are still opposed to that. Thoughts on Tan? Green energy is really strong into Biden, in my opinion. Interesting. They're saying to look at the last earnings call from Ride here. They're saying that the analysts on the earnings call were tearing them a new hole. They can swim.
Ladies
Thanks for
and
following,
gentlemen,
man.
thank you for standing by and welcome to the Lordstown Motors fourth quarter and full year 2020 financial results conference call. At this time, all participants are in a listen-only mode. Thank you. As a reminder, to ask a question, you will need to press star 1 on your telephone. To withdraw your question, press the pound key. Please stand by while we compile the Q&A roster. Our first question comes from Greg Lewis of BTIG. You may proceed with your question.
Yes, thank you, and good afternoon, everybody. And congrats on holding your inaugural earnings call. Steve, we're moving towards beta testing. That in and of itself, I guess, at this point is sort of a Herculean leap. Could you talk us through maybe some of the hurdles and how we should be thinking about news flow over the next couple months and as we move into September? Kind of like what should we be looking for, thinking about?
Good. Thanks, Greg. Good question. It is, I'm glad you recognize it is a very rare air to be this far along. And when we say beta, that is high 90%, let's say 97% the final vehicle, right? The airbags aren't dialed in and things like that. But these betas go for crash testing, durability testing, brake testing. Some of our early customers will get a quick glimpse of them. So it's really an important state. You don't see many. In my 15 years in the business, I haven't seen anybody get this far, except for, of course, Tesla. So we're really excited about it. I think some folks, if you're a small EV startup, which we've seen many of them, the general thinking is we'll build them by hand and then we'll slowly automate as we go. But we aren't doing that. The first Endurance that comes off the line in September is fully automated, as much as you can automate a vehicle. So making one every 6 minutes, everything we've done all this time is for two big things are always in front of us. Crash testing, everything is designed to get 5-star crash testing, and B, manufacturability. How can we manufacture this cost effectively, consistently, and control our quality and our supply chain. So I think what we're going to do, normally you don't see this sort of thing from the large manufacturers, but we're going to, today we put up a video, really showing yesterday what's going on in there. And I think if you look at it closely, especially if you're a car guy, you start to see the complexity of that body and the professionalism of it and how it's automatically assembled and welded. In 9 days, the first beta rolls off the line. We're going to be we're either going to have a party or some sort of review or reveal of that, and then automatically assembled and welded. In 9 days, the first beta rolls off the line. We're going to be we're either going to have a party or some sort of review or reveal of that, and then as we make the 57 betas, you'll start to see, like I said, some of them out in the wild. And our battery pack, for example. So this factory we have, it's very good at doing what it's done
So
for
that's
53
big. They've got a
years.
catalyst this week
Stamping,
of the first beta
robotic,
vehicle.
body, paint, assembly. But it's never made battery packs. It's never made electric motors before. So really, the 800,000 square foot propulsion lines that we're putting in, those look more like you're assembling iPhones, right? Very clean. Doesn't look like an automotive company at all. It looks like a tech company. So we're going to start to show that off as well, since it's such an unusual thing. Most people have never seen it. But we're going to, since we're pre-revenue, we are going to continue to just kind of leave breadcrumbs so people can follow our progress. You're going to see a lot of video. Video shows very well. The Baja race, entering in an early vehicle like this into really arguably the toughest environment a vehicle can go into. We're very excited about that, and hopefully you'll see some video of it, really taking the hits and holding up well. So you'll see a lot of that kind of stuff. And we want to start to invite the people to the plant, media day, analyst day. I think hopefully COVID's about over, and there's nothing like seeing it to really kind of grasp it.
Okay, great. And let's hope COVID is getting close to being over. And then could you elaborate a little more on the Holman agreement? From it looks to be just kind of a natural progression of a pre-order, but just kind of curious, how we should think about that, and maybe the potential for other types of Holman agreements kind of playing out here over, as we kind of move towards September.
Can't see.
Yeah, great question. Just 2 years ago when we started,
I'm listening to
if you were to ask, for some big data from anybody about how do fleets buy electric pickup trucks, right? There was zero data. So we pioneered all that, starting with hiring Ernst & Young, and then working with fleets ourselves directly. And then, and a lot of folks don't know this, but fleets many times buy their vehicles through third-party companies, particularly these fleet management companies like Holman. Holman has 2 million vehicles under management for all these different fleets. 600,000 of them, I believe, are pickup trucks. So we can, imagine the leverage we get versus our small sales force going out talking to fleets versus somebody that's got a great relationship and a long history with these fleets. So that's where we really got the, when Rich said we bumped up to,
she's in chat.
We're tooling so that we can make $60,000 a year as soon as next year. We're doing that because these sort of quantum leaps you can get with using the Holmans of the world is very exciting to us. So we're really, in this particular, we're still pre-revenue, we're pre-sales, right? We do not have a product yet. We won't have one until September to actually sell. So these are still conditional sales, but a step up in commitment. We are committing to them on the schedule. It's really a schedule of taking these vehicles. We're committing to them. We'll keep inventory for them, or we'll keep vehicles for them so they can be assured of X amount of vehicles. So it's not in blood because we don't have a product yet, but it is a step up from where we've been as we started from 0 2 years ago and are moving fleets towards. We had to find out what kind of vehicle would they buy, what price point would they do, what sort of bed configuration, what kind of warranty, what kind of charging, what kind of range, all those things. We kind of pioneered all that data, and we really feel like we have a great handle on it. But the most exciting part for us is finding these partners like Holman, like a Camping World, that just have access to a lot of customers. And just have long history with vehicles.
Okay, great. Hey, thank you very much for the time, everybody.
Thanks, Greg.
Thanks, Greg. So beta sometime this week. That's a big deal.
Thank you. Our next question comes from Adam Jonas with Morgan Stanley. You may proceed with your question.
Thanks. Good afternoon, everybody. Couple questions. First, on the testing of the Alafe in-hub motor system. Steve and the team, I know you guys have extensive experience with the technology, the in-hub technology, going back to the Workhorse days. But can you confirm how many on-road miles between what you're doing in Michigan and in Ohio? How many on-road miles you've tested the system in a fully built endurance prototype, not just the skateboard and not just in a lab, but how many real-world miles to date as we kind of get near the first betas coming out?
Good, great question.
Thanks.
You know, Alofi themselves has got about 200,000 miles on these hubs in
Trader,
vehicles.
thanks for the follow, man.
We have a prototype skateboard and a few alphas to date. We've been very rugged on those. Like all, you know, we've probably got 20,000 miles on those. We as we enter these betas, you know, 57 betas, we'll get a lot of miles. But I think the main thing is automotive has really figured out when you buy any new car off of any major OEM, it's durable, and it's durable because automotive has figured out how to test. So some of these betas will go into TRC for durability testing, just like any pickup truck does, and you know, everybody will be assured of a very reliable vehicle.
Thanks, Steve. Just a couple more quick ones. A spare wheel. I understand the Endurance may need to be sold with a spare wheel, including the integrated hub motor, to be carried somewhere on the truck. Can you confirm this and maybe tell us where that would be stored? Is that going to be in a payload or under the body? Because I think it's about 70 pounds, and you know, it's not an insignificant. It's a pretty expensive wheel, right. So you know, you don't want someone nicking it, kind of thing. You know, so I'm curious if it's a secure and where it is.
Oh, good. No. The spare tire is just like a normal spare tire and wheel. So if you have a flat tire, you don't have to replace the whole hub. That spare tire also is mounted under the bed like a normal pickup truck. And by the way, speaking of crash testing, for 5-star rear, that tire has to move underneath in the wreck. We have all that done. So, Rich, you want to say any more about that?
Yeah, I'm curious. It's not just the tire. My understanding was it was also the spare motor in case it was damaged.
No,
that's not true.
And by the way, if it does get damaged, you know, you have 4 of them. We can run on 3 or 4 or 2 or even worst case 1. So it really has the most redundancy of any vehicle any of us are used to. But yeah, so because we already got 4 motors, each with its own controller, we don't need a spare hub, just a spare tire in case you get the usual flat tire.
Well, that answers my question. I thought there would need to be a spare hub. Okay, thanks for confirming that.
So
and then finally on the DOE loan, the ATVM loan, my understanding is you've cleared all the major hurdles. You know, you're in a very my understanding is that you can pretty much draw on the $250 million when you want, and that's a pretty valuable option to have. Can you tell us how Lordstown thinks about, you know, under what conditions would prompt you to draw the loan from the taxpayers, and when? Is that $200 million by the end of the year? It's something, but it strikes me, you know, in the world of automaking, you may want a little more margin for error and not be, you know, in a situation like, you know, especially given the uncertainty around coming out of the virus, et cetera, et cetera. So I think you get the point, but just curious if you could elaborate on that. Thanks.
Yeah, sure. Just for folks that might not know, the ATVM is Advanced Transportation Vehicle Manufacturer Loan. And it was set up for OEMs so that they could produce more fuel-efficient vehicles. I think it's a Bush era thing. And folks like Tesla and Nissan and Ford got it. And so, but I don't think they've lent any out for quite some time. So we're really thrilled that after a lot of diligence, they announced that we were a candidate for it. We'd met all the things. And so we haven't cleared every hurdle. They're in diligence, and we expect that to be, you know, cleared up pretty soon. Whether we draw down on it, it's almost like a line of credit. We can draw down as needed. We don't know if we will, but like you said, it is a nice, first of all, it's a nice validation of us as a company, and B, since they haven't done one in so long, and B, it's like you said, it's a nice stopgap. We would use it maybe to pull forward additional vehicles faster, you know, the third vehicle maybe, but we're going through all the processes with them. We've been working with them quite some time. You know, it is a treasury rate type of, it's the best money you can get. So we want to have it at the ready, but the DOE brings a lot more than just money. They, as you know, They're into a lot of high-tech stuff, and we've really enjoyed a great relationship with them. So in addition to the access to capital, they bring a lot of tech.
And just as a point of clarification,
this is
Adam.
Yep.
It's Carter.
Hey, Carter.
The amount that we've applied for is still under negotiation. So you think about the number you cited as a floor, but we could certainly, in negotiations, ask for a higher amount as well. So just in terms of thinking in terms of liquidity.
I appreciate that. And my understanding is, again, they've done a very thorough amount of due diligence, and I think the point about the expertise in their network and their lab.
So this is saying the negative news coming out against them. It has to be weighed against the positive insights from the Department of Energy in the States.
Thank you. Our next question comes from Mark Delaney with Goldman Sachs. You may proceed with your question.
Yes, good afternoon, and thanks for taking the question. The company commented about encountering some degree of COVID-19 related challenges with the supply chain, which is certainly not a unique phenomena to Lordstown. It's been an issue for the whole automotive industry. But despite some of those issues, you reiterated the timelines both for betas and for startup production. Can you talk a little bit more specifically on what types of COVID-19 related supply chain challenges you have in fact encountered, and why are you able to remain on track with your production plans despite having encountered those?
Good. Great question. Thanks, Mark. Steve, I'm just going to turn that over to Rich. He's best to answer that one.
Thank you, Steve. So, Mark, that's a great question. So to kind of go through it is, we're looking at timelines and, of course, costs on our bill of materials. We have to look at any high-risk areas, and we've brought some of those processes in place based on the supplier, the volume or the capacity requirements we need to hit our targets. So we have had to go sometimes to a B supply, to our B source based on a timing, or based on the supply line of some of the suppliers supply General Motors, and we share some of those common parts, which was really critical to helping us reduce 6 months of our test and validation time to be able to use some of those critical parts from General Motors. So some of those I had to also go in and get some parts, other suppliers that we couldn't get the parts from General Motors based on capacity. So we bought some of those on our tools ourselves, and then we've also insourced a lot of those production lines. So we brought in, for example, the complete battery line other than the cell we brought in. So that means we control our own destiny on the pack, on all the modulars, and on the battery management system. We did similar to the frame. So we will stamp our frame. We will do all of our welding in our frame, and, of course, powder coating our frame. Some of that is due to the timeline, and then some of that's due to the cost. So
they control their own
we kind of
supply
did it as a make versus buy, and accelerated our program to make sure we could hit our September production timeline.
That's helpful. Thanks. A couple more questions, if I could. The Endurance, a test vehicle, had a fire earlier this year. Can you describe where Lordstown stands with respect to having fixed that issue?
Absolutely. So that was a few months ago. That was an early test mule, hand-built. We discovered that during the assembly process we had a human error. Naturally, we've corrected that. And, I don't want to dismiss it, but I do want to say in this business of electric vehicles, it does happen. Thermal has really got to be carefully watched. And so we feel very good about that learning and a lot of other learnings. We have third-party validation people testing the battery now, just in case we've missed anything. But, for example, what the battery is about to go through at Baja, that is the regular battery going through that. And we thought about putting a bigger one in it just so we wouldn't have to charge while we're out there. But we wanted, the whole purpose of Baja is to validate the vehicle. So the hubs and the software and the battery pack in particular are about to get more beating than they're likely to get in the lifetime of a fleet using it. So all that is to go above and beyond. And by the way, when we did have the event, we were pushing it above and beyond its specs, faster and harder than it's allowed to go normally. So, but it's a learning, and that's why you test. But it was a mule. It wasn't a full vehicle. It was a test mule.
Got it. That's all. And just lastly for me, the company posted a video today of an endurance body being assembled by some robots. I was hoping you could provide a little bit more color on the video and how similar is that process that we saw in the video today to what the company will be using for its actual beta production. Is that the same type of configuration, and are those robots the actual ones being used for full betas, or is this still part of the development process? Thank you.
The short answer is yes, but I'll let Rich elaborate.
So, Mark, of course, these are actual betas. So this is our actual body shop line, and the video you saw is the actual processes. It will be a little faster process than what you saw on there as we go through. These are our tools also for the stampings. So they're what we call a curb set tool for the beta. And those will eventually become into hard tools in the stampings. So right now, we've turned our drawings in. We're in beta to make sure all our fits and finish is good. I'm a 30-tier automotive guy, and I can say honestly that this is probably some of the best fits on the metal that I've had in my 32 years. So at this stage in beta, we have really good fits. We have really good quality. Of course, we have a laser roof well that you saw on the video that most car companies don't have unless they're a luxury brand. Fortunately, we were left that piece of equipment from General Motors. It's a high-end piece of equipment that usually car company doesn't have based on a return of investment. So we were fortunate to get that. It improves our structure. It also reduces water leaks potentials. And the equipment you saw is the actual equipment, and the parts you see is the actual stampings that we will be going forward with into the PPV and, of course, SOP.
Thank you.
Fucking A. Thanks for the follow, man.
Thank you.
Thank you. Our next question comes from Harry Nickel with Wolfe Research. You may proceed with your question.
Hey, thanks for taking the time, guys. The first question I had, just given all the capacity you have in the factory, I mean, it produced 400,000 cruises a year, and you've actually talked about additional capacity on top of that from what you've done. Do you think there's potentially interest from other OEMs that may not have made as much progress in their own EV development that are looking to electrify their truck lineup in potentially buying skateboards or even some sort of contract manufacturing arrangement for Lordstown?
Yeah, that comes up a lot. And just think of it this way: let's say there's a lot of startup EV companies all of a sudden, and are they all going to build out an 800,000 square foot battery line, or their own electric motors, or all the software involved? So it stands to reason that there should be some cooperation between. But normally you're so competitive with an OEM. OEMs don't do that, generally speaking. But we to be frank, we've had some inquiries from some other firms, and we think about it. But then, we also think, we're going to use up every battery pack we can build. So it's a toughie. We understand the business model, and we're not worried about competitive because there's just so much room for everybody, right? At this point, at this early access. So we do wrestle with it, but right now we don't have any agreements to do so.
Okay, thanks. That's helpful there. And then kind of more of a housekeeping question on the marketing side as we're thinking about demand and orders. I know you had been taking kind of some of the early test mules around the country. You'd been getting them in front of customers. Is that going on, or are you seeing the sales force is more focused on this conversion to firm orders that's really come to the fore now?
Well, first of all, I wouldn't want you to think that just the pre-orders that we had was the whole universe, right? That was a small subset, we think, of the universe. So we're not limiting ourselves to just converting those, right? The 20,000 that we're talking about to date, I wouldn't call those conversion, but I wouldn't want anybody to think that was just, we only converted 20 of the 100. It's just a wide open field. So our salespeople, deal with the larger fleets. We don't have enough salespeople to deal with the smaller fleets. And they also are the liaison with the Holmans of the world and the other folks that are helping us bring the vehicle to the fleets. So we're really trying to train the trainer there and get the leverage where our one salesperson might be able to, train a fleet management company, and they might be able to have 100 salespeople on it. Also, municipalities and some of the state and local fleets that we haven't cracked into yet. Military is interested. Federal, when the new GSA person gets in there, I think from President Biden, there's going to be a lot of GSA electric trucks desired by folks. So it's a very broad thing.
All right, guys, we're about 30 minutes into this Q&A session. Has anybody heard any of these analysts that seem doubtful that they are going to hit their September target? Because that's the conjecture that was thrown out here, is that these analysts seem hesitant that they will actually hit their September 2021 goal. Now, what I'm hearing here is there's a lot of questions regarding specs, construction, the Baja race, beta rollout, skateboards, sales teams, and cross-promotion of OEMs into their business. What I heard was they've internalized their systems. They are still on track for Baja. They're rolling out betas in the next week. There is potential for other OEMs to potentially use the space. Their production chain being internalized is a good thing. The misconception that's floating around out there that they're going to put additional motors in the vehicle to increase weight, that they said outright that's not happening. There's going to be a spare tire. Oh well. In regards to the pre-orders, they did just briefly touch on it. That was the first one to really bring up the pre-orders. They said of the 100 pre-orders they had, 20 of them have actually converted, so they've got 20 grand in pocket as far as official pre-orders go. So you went from, I have an interest, to the sales team reached out to those 100 people, and 20 of them actually put 10 grand. Is that right? Got 20 grand. No, I guess it's $1,000 a piece that they put down to reserve a vehicle. So I mean, I'm not hearing anything here with Lordstown that has me particularly concerned. If Hindenburg's short report, if this is the extent of it, that I need to be concerned about Lordstown because of yeah, so fake orders was the one earlier this month. Apparently this is the next short report where Hindenburg is showing pictures of the truck breaking down. Okay, so these pictures here, guys, this does not... I mean, has anybody ever done any design work? This is from July. Has anybody ever done any design work? It doesn't have to be on a vehicle, just on any product where you're building it from ground up. No specs. You showing picture of them loading this on a truck in July does not, in my mind, exclude them in any way, shape, or form from actually delivering a product. They're not even talking about appearance. They're just saying, look, here's a picture of the truck broken down with them having to push it back onto a flatbed in July. There's no way that this will be ready for September. I'm sorry. I'm going to have to lean into Hindenburg just doesn't understand how these are built. You could have a single piece of this truck fail. Fanboys, thank you so much for the sub, man. Much appreciated. I don't want to miss that. It is a sub. Thank you for that Prime sub. You rock. Thank you. Yeah, but with Hindenburg here, guys, I'm going to have to say that this one doesn't actually matter to me. The big thing for me is, so they have said that we can expect to see betas roll out sometime this week or maybe early next week. Prototyping and fixing, yeah. I mean, literally, guys, a wire came loose. That could be what caused this. When they get it back to the shop, this wire came loose. Fixed. And now, if they had a picture of this truck on fire, exploding, okay, then I might be a little concerned. Tro Surge, thank you so much, man. Much appreciated. That Prime sub. You rock. Hype train. This does not have me concerned. It really doesn't. Now, guys, I don't have a position in this. I'm just I'm looking at this out of all the EV hype that's coming up. Which play I really like out of this that I see potential coming back from. I think these double shorts have driven Lordstown too low. If the next headline coming out is betas roll out on ride, this is going to go back up to that 2030 range. This is there's a quick flip on this. There's a quick flip on this, I think. CCIV is a bit of a different animal for me. I did trade CCIV in the past and make a profit on it. Ratham thank you for the follow. Much appreciated. Let me know how you found the stream, what it is you trade. Yeah, with CCIV, guys, I did trade in the past. What I'm looking for is something that's been beaten down too far. Clearly, this likes to trade from 10 to 30. And I think with positive news like Baja or the beta rollout, this is going to be fine. Let's go here to this. Let's go here. I'm going to add this. Ride calls September. I guess I want October because I don't see September here. Yeah, I mean, I can get an October 30 for $100. I think I look to do this. October. I may actually exit my CCL leaps for this play. Flavington gets that hype train in. I think I might actually take a ride put or a ride call. I gotta put a slash here so I was confused. Thank you so much, guys, for the follows and subs. I'm not seeing anything that has me bearish on this. Let's see what the sentiment is on StockTwits. Get a retailer sentiment. Slightly down on sentiment. Goodyear's partnering with Lordstown. April is the San Felipe 250. Now they did say for the Baja here, guys, this 250 run, that it's going to be the skateboard that's used with another vehicle put on top. So the base is going to be the endurance base. With all the functionality of the drivetrain and all that is going to be the Lordstown drivetrain, but the top part is not going to be. That's going to belong to someone else. But so April is a potential catalyst for it as well. I may also need to add this in here. Entry, hot sector, EV, Baja, San Felipe 250, beta rollout this week, beta rollout end of March. This is April 18th. Production on track, September. Partner needs Goodyear. Retires. Exit. Price target $30. News catalysts. If at any point there was a news catalyst and I was to take a position on this, a news catalyst of they're not going to hit September production line. Beta rollout doesn't happen. San Felipe, the truck blows up, like something terrible like that. Those would be catalysts for me to exit the position for sure. But I think that depending on what Zomedica does this week, I add this in. Hopefully Ride doesn't go too far too fast on their beta rollout. But this is kind of nice because what this gives me is I'm currently in SNDL, SHG, ZOM, and FTOC. But if Zomedica does what I think it's going to do into the end of March here and early April, I am going to have the position to take 3 more plays just off of the Zomedica win, in which case I can split those 3 ways between Ride, UMC, and AQB. Maybe 4 ways into DGLY as well. I may need to pick one of these that I like more than the other. I do like the semiconductor shortage. I do like Ride. The thing is, like, the revenue projections on AQB are nuts. Yeah, it looks like and I saw that too with the Fed, that Workhorse is actually looking like they've got people working behind the scenes to get them something, to get them a piece of the pie, not the full contract, to get another contract, saying that there shouldn't just be a single provider, there should be more. I think that Workhorse still sees a deal come in for sure. But this revenue projection for AQB is nuts. To go from nothing to 10 million in sales in 2 years. If they can actually hit this, it's going to be pretty crazy. That they missed on revenue doesn't really mean anything. Why not check to see if Ride will roll beta out in time? Yeah, and that's just it. Like, I'm not in a time constraint, but those would be my exit and entry parameters for Ride. I would enter on these on the news that I've seen here. The Hindenburg just makes it more appealing for me than not, I think. But with that being said, guys, I do need to hit the road here. It is the end of the day for me. It has been a absolute blast. It is a short week next week, so keep that in mind, guys. Thursday is Friday. Good Friday is coming up, so short week for sure. I have a bunch of stuff this week as far as Easter goes. We are a practicing Christian family in my home, so this week is a big week for us. Wolfie, thanks so much for the follow, man. Much appreciated. So for those of you that celebrate Easter, happy Easter. We are going into a crazy week, Palm Sunday tomorrow, so lots of stuff going on. I will see you guys Monday morning, 9 a.m. We'll be right back at it, okay? So don't miss that. Let's head over real quick and see if there's anybody else that's actually doing some planning for next week over on Twitch. I imagine there's somebody in here. There's not really. So I guess I'll just shut down the stream then. There doesn't seem to really be anybody doing anything live here. This is just ticker charts. I don't want to throw you guys there. So we'll just end the stream for today. Have an amazing weekend, guys. I will catch you guys Monday morning. Later. Thanks for all the follows.